Technology makes things cheaper and easier to produce, and technology is improving all the time. And the rate at which technology is improving is accelerating. So why aren't prices going down as technology makes things cheaper and easier to produce? And why aren't we upset about that? When we think about big ticket items like houses, it's not just that we don't want prices to go down. We actively want the price of things, a lot of things, to go up. You want the price of your house to go up. You want the price of your stocks to go up. We want the price of everything to go up, even though the intrinsic nature of technology is that it should make everything cheaper over time. This disconnect between the reality of technology and the way our money works was explained to me in a book called The Price of Tomorrow that was written by our guest today, Jeff Booth. And I'm thrilled today to share in this conversation about the deflationary nature and why Bitcoin is so critical for a bright future. I'm Scott Dedels, and I'm the CEO and founder of Block Rewards, and part of our mission in bringing Bitcoin to the workplace is helping people understand how it will help them. So if you're ready to learn something about the deflationary nature of technology and why Bitcoin is critical for a brighter future, stick around. This is a good one. All right, welcome to another episode of the Block Reward podcast. Thrilled today to introduce you to our guest, one of the most important thought leaders in the Bitcoin space, and a person who I am a huge fan of myself, Jeff Booth. Welcome to the show, Jeff.
Thanks, Scott. Thanks for having me.
Before we get started with our conversation, I want to start the episode a little bit different. And I haven't personally ever taken the time to tell my story about how I came to first start understanding Bitcoin. And it's a story that relates to you. And so I thought it would be an interesting place for our listeners to understand one person's journey with this stuff. And so my background professionally is that I spent my career in working in employee benefits and pension consulting. And in the spring of 2020, we went into a different period, obviously, when Canada shut down and the industry itself was going to change, and employers were going through a number of stresses and challenges trying to navigate those times. And the Canadian government responded with what was then an unprecedented amount of money creation. And they were paying businesses to stay closed, paying their staff to stay home, paying their rents. And what occurred to me was this period was going to trigger ramifications for the bond portfolios that we were managing for our clients inside their pension funds. And so I was concerned about what that might mean. And it seemed at the time like we were on a collision course with accelerating inflation. And my personal background beyond that is I didn't go to business school and university. I was a history student. So I had a background in understanding the rise and falls of currencies, but not the technical understanding. And so I spent the first part of lockdown reading university economics textbooks. I read a few, and it was after 4 or 5 that Amazon recommended me a different book based on what I had already purchased. And that book was Price of Tomorrow. And what happened there is, as you know, and for our listeners, Price of Tomorrow is a book that has garnered a lot of notoriety. And it's not explicitly a Bitcoin book itself, but there are Bitcoin ideas inside it. And what happened for me was I went into reading that book, hoping to understand for my clients how we could navigate through the system with the changes that were going on in the money system to help protect them. And what I left from that book was an understanding that there's an intrinsic problem with the inflationary money system and the reality of how technology actually works. And so it's your idea. And I was hoping that we could just start with your own explanation of your thesis and for our listeners, your view of the world and technology.
Yeah, and that, thanks, Scott, and I'm glad that helped. And I think that when you can see something that should be true that isn't, then it forces a curiosity, and so I think that's happened for a lot of people out of that. So I'm glad it's helped. But I did the same thing. As you were doing before I wrote the book, and like literally for 10 years, because I was a technology entrepreneur and have been most of my life. And what does that mean? It means trying to create more value for people through the use of technology. And when I realized that was happening, and it was happening at a level that was unprecedented, because with technology today, technology looks very different today than it looked in the past. It's moving faster and faster. And so that essentially tool or underlying thing that we use to deliver more value to people, assuming you're creating more value, must be deflationary, right? Because nobody would use your thing or the service or or anything you're creating unless it gave them more value. So us all as users trying to get more value in our lives, and entrepreneurs trying to solve problems where we don't have enough value, they race to solve the hardest problems, and out of that creates more value. And so that output, the free market says that must be deflationary. So the natural state of a free market is deflation. And so why I was talking about this for 10 years as this was accelerating is, and I couldn't square the paradox. Why did we live in a world where prices were going up? Everything we used and underlying the fabric of everything that was creating for the base level wanted to make prices go down and flow, and essentially the productivity. When people talk about growth today should be measured in faster deflation, because growth is productivity and productivity growth is deflationary. So I couldn't square that paradox. And for 10 years, I'd joke around about this. I'd talk around to campfires and stuff with my friends and late at night and playing guitar. And this would keep coming back to me. And nobody wanted to talk to me anymore about it. And I could see so I investigated it, because when something doesn't make sense, I just want to keep on chasing it until it makes sense. And so I investigated our current monetary system to the ground and why it looked the way it looked like. And if it was built on debt, then you had to create more and more inflation, because otherwise the debt would reset. Because if the debt market, the credit market can't allow deflation, because the debt gets more expensive in real terms. So understanding that the entire world was built on that debt is a credit note, that if you allowed deflation from that system, then you'd have a collapse. So then through there, you could say, okay, I get it. So people are monetizing that debt, making up more units of money. First, more and more debt that couldn't be repaid. And then when you realize that debt couldn't be repaid, you have to monetize that debt or change the currency unit, print more money to be able to pretend to pay it back. And that whole process is robbing citizens all over the world from the productivity gains that should flow naturally to them in the form of lower prices. And we're still keeping them on a treadmill, working harder and harder and harder while it steals more and more from that system. And they wouldn't see it. And most of the people stuck in that system would get worse and worse. So it was in exploring that for myself, that getting down to the sand of it, and then talking about that all the time, and nobody being able to put the things together. You'd have technologists saying, I'm building a better world, but not realizing you couldn't out of the existing system, because it had to centralize all of that. And essentially by centralizing it, remove democracy. It would have to be a control system, because no one would choose to live in that world. So really, you could see all of what would happen as a result. And why I wrote the book finally is you could see this playing out. And I was worried for my kids, the type of world that they would grow up in. And so it was cathartic, I would say, to write the book, to be able to tighten up these thoughts in a way that were easy to understand for a whole bunch of people.
And so, to really just flesh out the connection of how this relates to Bitcoin as a potentially deflationary monetary system, we have the sort of the paradox of...
And can I just before you finish that thought?
Yeah.
It's better to say neutral monetary system rather than a deflationary monetary system, because Bitcoin is neat. All it is an honest ledger that forces the free market, which is the natural state of a free market, to allow that productivity to flow to you in the form of lower prices. That's probably the better way of saying it, rather than it's deflationary money. Right? It's just neutral money. It's just a neutral. Yeah. Go ahead.
Yeah. No. That's a great clarification. Maybe could you just talk a little bit more about how you then made the connection between the thesis and Bitcoin as a solution?
So understanding that a system problem, creating the problem, couldn't be solved by the system creating the problem. Then you look at alternatives and alternatives throughout history and everything else and what that would look like. And so typically the alternative throughout history is you go to war, you create a bigger enemy. First you create an enemy inside your country, right? And that division within your country. Some leader gets elected that takes away some of your individual rights and freedoms, and then has to create a bigger enemy outside their borders to be able to stay in power, all the while printing more money to be able to divide you. Throughout history, you've read history books, that's what it looks like. And then who wins the war, what is sometimes global conflict. Okay, now we're going to reset it again and start over, typically to gold or something like that. And gold gets centralized, same game gets played, and it repeats throughout history. And why would that repeat throughout history? Because most humans don't see the natural state of a free market is deflation, and they believe inflation is normal. And so that what that actually means is if you could control money and steal a little bit from all humans, that productivity that should flow to them, you get to do nothing just by printing paper. And the people in your circle get rich on the back of the productivity that should flow to society. Instead of them getting this flowing to them, you get a little take on all of them. That's probably also why people say 2%. So because you wouldn't notice if somebody walked in and stole 2% of the items out of your house each year over a course of a year. But if somebody stole 50% of your items over the house, you'd notice, right? So that's it's a theft, and it's done over populations. It happens over and over throughout history because people don't know it's a theft. It's actually worse than 2% because you should be comparing it not from zero, but the actual rate of deflation in a free market, which is probably today 5%, 7%. So it's way more. And so people don't notice, and they trust the government, and they keep on doing it, and it keeps on accruing. Bigger companies, bigger monopolies get bigger and bigger and bigger, and they go into and then the state and the largest companies, and today technology companies, kind of form a partnership to exploit more. So that's typically what happens, and we don't notice it. So then why Bitcoin? And when this is, if there was a discovery that truly was different, winners write the history books, and there has always been a way to cheat the system and steal productivity from society through gold because it had to be centralized. But there was always a way that people could cheat away and create the system. Then it means all of our history, all of the books, all of the reasons why this person won, or they're filled with this error code around who controlled the money and why, and they're missing what could be an insight of something totally novel, a discovery that was never there before, that was truly decentralized and secure. Upon finishing the book, I actually probably I assigned a 5%, even though I'd bought a lot more Bitcoin in writing the book and understanding what it was and everything else. My knowledge at the time in 2019 of Bitcoin, it was deep, but not as deep as it needed to be. And as a result, I assigned a probability of it failing. And by failing, I mean becoming not decentralized and secure, some compromising. I assigned a probability of it failing of about 5%. Now, I only realized that now. I didn't realize it then. That wasn't Bitcoin's probability of failing. It was my perception of it failing. And so when I tried to do, then I went way deeper, and I tried to disprove everything I'm saying now and take the counter argument and try to, how would I kill Bitcoin? What would it do? The amount of power that would be in the existing system that would come after this decentralized and secure system, because it removes the what was always there throughout history and human greed and everything else. It removes that forever. If this is true, essentially it came at it as say it can't be true. There's no way it can stay decentralized and secure. And as I went through that work, I realized, and I just decreased my probability of it failing over and over and over again, to the point that I realized you had to have a system, a parallel system from the one we were in, that imposed rules on the one we were in, rather than the one we were in imposing rules on Bitcoin. And so that's what you have. You have a system in Bitcoin, and most people are mismeasuring it, and that's why they're so confused. They're measuring Bitcoin from a price of a fiat instrument, which is being debased, instead of all things priced in Bitcoin, where you would see it just solves that incongruence. All prices are falling in Bitcoin, and they will forever.
You phrase it as, and you spoke to it there, this idea that Bitcoin enforces an effect on the market, whether you believe in it or not. And this is happening right now. Two of these factors are accelerating as well. And one of them is monetary debasement, and the other is the rate of technology and the advancement. And I wonder if you could just talk a little bit about sort of that triangle, how those three things relate.
Yeah, so they're completely related. In fact, they're mirror images of each other. So and that's why I say, so my house has, even though it's risen in fiat terms, in the last 4 years, it's gone from 300 Bitcoin to 35 Bitcoin. If I had 300 Bitcoin 4 years ago, it could buy one house, and now it can buy four. Now it can buy 10, right? Or almost 10. In the next 4 years, that'll say the same thing. The same thing will happen again. And so it is repricing. And why does a house hold value? A house hold value today because it's created a monetary premium, because it's no longer a utility. Because if you saved money in your bank, you know you're going to lose money. So people store their wealth in houses where it doesn't lose as much money. But you can see by what I just showed you, the rate of the house falling in Bitcoin terms is pretty aggressive. And that's the same rate as is happening in energy terms. And all prices are falling at that same rate, according to Bitcoin. So if you price from Bitcoin, you can see it totally clear. You can see as technology moves faster, prices are actually flowing to you in the form of lower prices faster. If you're pricing from the fiat system and everything there, as technology moves faster or exponentially, it has to steal more of those gains to keep the control system in place. So if you just ran a line, an exponential line around technology and how fast that's moving, and the mirror image on the other side of the ledger you're living in would be the rise of debt, because it has to stay solvent. And this was something, I don't know if you remember this from the book, but why I could see it so clearly is I said, even though in the past 20 years, as technology has moved, you've created $185 trillion of new debt for $46 trillion of GDP growth. So essentially 4 to 1, right? New debt for every dollar of GDP growth. But that's not what I was worried about. That's behind us. And remember, 185 trillion at that time was on 250 trillion total debt in the world. But 185 trillion came in the last 20 years. So a staggering amount of growth in debt. Today, that number, it's only 4 years later, is about 400 trillion. And it's about to jump way up. Why? Because technology is moving faster, right? Or technology is moving the same speed, but it's exponentially, it's doubling, right? And so the rate of debt has to go exactly offset, and it has to grow at that rate. And if it doesn't, it probably has to grow faster, because if it doesn't, the whole system collapses. And so once you understand that, and now which system do I want to measure in, right? The one that's insolvent already. And by the way, if you tried to pay back that debt at $1 a second, it'd take 12,873,000 years to pay back. But it's worse than that, because there's now no way to pay it back. As things become free, this Riverside app that we're using, the AI that you use every day, all of these things, as they become free, where do you pay back the debt with free stuff? And that's why deflation causes debt to reset, because prices come out of things, and you have to push up price of other things to be able to try to pay it back. So what are those other things? It's cascading into store of value assets like housing or food or energy. And so some of these things, and that are skyrocketing, education prices and everything else, but they're only skyrocketing in terms of the debasing currency. They're not skyrocketing in terms of Bitcoin. They're all falling. Interesting story. This weekend, somebody that quite quite smart, like really smart. It created a creative destruction lab. He started in Vancouver, one of the preeminent technology programs for kind of creating billions of dollars wealth in companies and startup companies. And he asked me to mentor in there, and I was one of the founding fellows or founding mentors in this program. So I've been helping for a long time, and I couldn't understand why he couldn't get Bitcoin. And he thought I was an insane person for a long time. This weekend, I was skiing with him, now just starting to get curious because all these things are accelerating on both sides, just like I said they would. And I said, well, have I ever given you a Lightning transaction? Have I ever just kind of the rails? And he said, oh yeah, you did that a number of years ago. He said, but I haven't opened it yet. And I said, how much did I give you? He said $10. I said, just open your app. Pulls out his wallet. It's $50. And I said, so if you denominated your wealth in this at that time, all prices would have fallen. And you think they're rising because you're denominating your wealth in a currency that's losing value all the time. So it finally clicked.
It's amazing how there are a number of different roadblocks to onboarding Bitcoin ideas because they can be so different. And you mentioned the term error code. There's a term or a concept that comes from Austrian economics. It's sort of the idea that if the unit of account itself is broken, then it's going to be impossible for the market to determine the correct price of anything. And it sort of creates a systemic distortion in terms of how people understand basically the price of everything, which is sort of this idea. And you also touched on the concept of other store of value assets. And there's a much bigger idea about what Bitcoin could do over time as a greater symmetry of information happens and more investors start to understand what Bitcoin can do, and it makes obsolete the need to use your house as a place to store your money.
Completely. Not just that, but think about this in people you know right now that are playing in the stock market, and they're putting their money in Google, Facebook. Because without the top 7 companies, NVIDIA, Google, Facebook, Amazon, Microsoft, without those companies' performance, the stock market would be very negative. So you have the 7 top companies. What do they all share? All those companies, AI, right? So what is AI? Remember, marginal cost of production falls to zero, right? Their prices fall. Prices fall to the marginal cost of production. What is the marginal cost of production of a line of code? Zero. What's the marginal cost of production for a line of code created by other lines of code? Zero. So what our AI company is doing is that marginal cost of production is falling to zero. They're offering you more and more value. Google gives you free search. All of these other give you more and more free. So you use it all the time as they're reducing more and more labor to be able to give you more value. Because if they increase the labor, they would have to charge you more and you would use something else. So they're competitive. And so as a result of them driving into AI faster and faster and faster, then you put your own money there to make that company more valuable. Because if you don't, you're losing money to the general market. And so then why are those big companies? Why are those monopolies? Because you're doing it, and so is your pension fund. Because if you don't, you will lose. You will lose all your money. But now measure those companies according to Bitcoin, and every one of them is falling. And so it's because it's a forcing function that it's writing. Prices will fall to the marginal cost of production. If you have Bitcoin, it means prices will fall for you forever. And they'll keep falling. If it stays decentralized and secure, that is going to happen. And the only question, and it doesn't care, right? Whether you believe it or not. It doesn't care whether government believes it or not, or Google believes it or not. It doesn't care. It's just imposing that discipline on the market. And that market doesn't have any discipline. It can keep on printing more money.
Hey, everybody. I'm thrilled to announce that Block Rewards has come on board as a sponsor for the 2024 Canadian Bitcoin Conference happening in Montreal, May 16th to the 18th. It's going to be a great event with an unreal lineup of speakers, and we couldn't be more excited about being involved. If you're thinking about going and you don't have your tickets yet, you get 10% off of your pass using the code BLOCK2024, and that's all capital letters. And you can get those tickets at CanadianBitcoinConf.com. Hope to see you there.
What are they?
The idea of the error code that makes it difficult for people to conceptualize the fundamental flaw in the system. Another one of your ideas that I think is worth just touching on quickly is sort of delineating Bitcoin as an investment versus Bitcoin as a technology. And you have a great way of explaining how Bitcoin, it's a protocol, which is something different. As we're talking about Google and the tech companies, and people often will mistakenly think, of the upside of Bitcoin from a fiat price standpoint as it might relate to some of those companies you mentioned. So yeah, if you could just...
So I would go, the first thing you said is a technology, and I think you have to go deeper. So let's think in terms of what this looks like. And just before I do, drop in the show notes, finding signal in a noisy world, so people have access to it. Because what I find is a lot of people need to read that 2, 3, 10 times, and then kind of clicks to what's happening here. But that's exactly it. So protocols don't come along very often. So how do we think about things? First, we think about companies that provide value, technology, the companies that provide value. Then we think about new technologies that could provide value to a whole bunch of different things like AI, or you could say solar, or different things that are... So we think in these terms, like iPhone or company that provides new technologies that kind of broad-based that a whole bunch of new companies could create. And then we very rarely think about protocols that are underlying all of it. And why do we not think about them? Is we don't think about them because they don't come along very often. The others come along more often. Companies come along all the time. Technologies more often. Protocols very rare. So how does a protocol develop versus companies? And remember, TCP/IP is the first layer of the internet. It was developed by DARPA in the 60s. And then HTTP is the fourth layer, which it was developed in 1989. So think about that. Call it 69, 79, 80. So 20 years of progress before you had HTTP. And then another 17 years before this came out. Because entrepreneurs then use that new stack to create companies and value and different things that create value for us. And that's a process of, wow, with what we have now, we can create something new. That same protocol stack runs this Riverside app and everything that we're on. And if you ask that same question back in 89, 90, 95, very, very few people knew what was happening. But those that did, that started to build on there, changed the world. And all the value that we take for granted today that lives on top of that. The same thing is now being played on Bitcoin. And so what ends up happening is protocols come in layers, and each layer has to ossify, and it has to do a very narrow job and sacrifice doing other jobs to do a narrow job really well. So it ossifies, and when it hardens and it hardens and it hardens, because if the layer below the next layer fails, everything on top fails. So what Bitcoin did is the design principles of Bitcoin was for decentralization and security. And so it's the first time humans have ever seen something decentralized and secure. They always had to trust an institution for that would protect them from money. But money is superordinate to laws. So the institution eventually got corrupted. This is the first time in history the discovery of Bitcoin was the discovery of decentralization and security together. That insight would be a big deal, meaning all you'd have to do is just hold it and you'd get rich, right? Because it would be repricing everything else over time. And nothing could, if it stayed decentralized and secure, that would happen. But what would also happen in the market is everybody confusing how protocols work versus technologies work would say, I have a better Bitcoin. My thing does more. My thing does this. And a whole bunch of people confused about that process would trust those people because they knew more than them about technology, and they were confusing a technology with a protocol. And you would have all of this altcoin nonsense that creates other things that confuses the market. Well, Bitcoin continues, and it happens because of something called a blockchain trilemma, or that is specifically here in blockchain trilemma. And the design space of a blockchain, you can solve 2 of 3 sides of this trilemma. decentralization, security, or scalability, but pick only two. So if Bitcoin picked decentralization, security, and designed the design space to do that, and you can objectively look at that today, and you could say, is it more decentralized and secure every year? The answer is yes. And you can see how much mining compute power, how it's decentralizing around the world, how nodes are decentralizing to hold that in check. You can audit anything I'm saying. It gets more and more decentralized and secure. Then you couldn't beat Bitcoin by creating another decentralized secure platform with exactly the same utility, because it would have less decentralized and security and the same utility. Who would use it? So the only way you could try to beat Bitcoin is you would say, I'm going to sacrifice decentralization or security to build scalability. And so if you sacrifice decentralization and you have now you have a centralized blockchain, right, like Ethereum, but it can build smart contracts, but it gets more and more centralized. You have to ask yourself, how would that ever work? Because the economic thing alone, besides the individual people who are incented to play that game, kind of short-term holders of Ethereum, because now you have an expensive database, right? Because that's all a blockchain is, right? So now you have a centralized, expensive database. And if you're going to centralize something, economy says just the natural state of a free market. No one would centralize on a database, on an expensive database. They would just use a database. So then you ask yourself further questions when people say, I'm going to have DeFi, decentralized finance, on top of a centralized database. It's ludicrous. Like it's not completely nonsense. Or other tokens that sacrifice security for scalability. And so that design space forces a trade-off to be able to trade one of those off, and why all of these other coins go up and then they fail, or they get centralized and they will fail in time because they have to by the design space. But remember what's happening. You can't see what's available on the second layer until the first one is ossified. And so right now on the second layer, now you're handling transaction speed, optimized for transaction speed on the and cost scalability on the second layer through Lightning. And there's other coming out like Fediment and others that are coming out that make those trade-offs, but every 10 minutes come back down to the first layer. So you solve the protocol design in a layered approach with different layers solving different aspects. But it all is built on a foundation of decentralized and security that keeps coming back down. And so, by the way, being in this space and watching so many people confused about this and where this is going, like no matter what, this is going here, and being able to play in some of the investments that are actually driving this, I'm not one bit worried. In fact, I'm so excited about what's coming. People talk about, okay, well, what about the fees on the main chain? Doesn't matter. It just pushes more to the next level faster. And what's coming is incredible on a base foundation that is decentralized and secure. So I do empathize with people who don't understand this. And I think in terms, because they're caught with a whole bunch of noise from different people promoting their things. And there's just so much noise out there, and versus what this looks like. So, but this is inevitable.
I've seen you talk elsewhere about how the challenge you've had as a successful technology entrepreneur yourself, and a number of your peers in that space who haven't understood these ideas yet, and you're sort of promoting ideas that are counter to their line of thinking. And Google and Apple, these companies themselves outwardly haven't adopted or understood Bitcoin yet. And I'm just wondering if you could talk a little bit about.
Yeah, and I went to it was called Global Zeitgeist, and top 500 minds in technology. Some of the top people they identified each year, and I went to that many years through kind of the last technology cycle. And in the last technology cycle, there's always a technology cycle, but to the internet protocol, I saw the same thing as I see now, but Bitcoin's way more powerful. Like it's an order of magnitude bigger than the internet is what I'm getting at. But I saw the same thing in the internet largely before a lot of other people saw it. because of the same thing I'm describing here on Bitcoin. And through that process, I just understand the process, and I understand that process and why it's hard to understand, why people are confused. Because if you've lived that game before, I remember what people said about what they said about the internet in those days, and what that looked like, and it looks remarkably similar. But Bitcoin is, again, it's an order of magnitude bigger deal, for the world too, because it doesn't allow the centralization. It forces the decentralization. I mean, it forces prices to fall for everybody. And so there cannot be monopolies inside of Bitcoin. What it ends up happening is, if you try to create a monopoly and block people out through pricing instead of value to people, somebody beats you. So it's a constant evolving force. It's what the internet should have provided, but couldn't, but centralized faster because of broken money. Bitcoin is now solving that problem, and it's going to end up being a new peer-to-peer internet that's going to change the world.
And I think a lot of people who are involved in Bitcoin, aren't old enough to remember what the internet was like in the early days. And, when we're talking about TCP/IP, that wasn't designed to stream 4K video on a handheld device, right? Like, these are subsequent innovations that took huge amounts of time. And even the way we interact with email, email looked a lot different. I think about email like Bitcoin wallets. You get objections from people who aren't involved in Bitcoin about the usability, the UX interface. And these are all things that are being worked on at a rapid pace. You mentioned the level of innovation that's going on. It's mind-blowing for people who are in the space and people who are on the outside.
So here's an interesting thing for any of your listeners. Watch, I think it's actually generalmagicmovie.com. But go watch General Magic Movie. It's a story about General Magic. I think it was in the early 90s. Tony Fadell, a bunch of others, who were then brought in to build the iPod and the iPhone. Exactly the same premise in the early 90s, where the technology wasn't there. And what they ended up doing instead, they were along their journey trying to fix these things to create effectively the iPhone in 92. Some of their insights into the technology layers created the ability to do the iPhone later. So that's what I'm seeing right now. And so every time somebody says, well, that's not available, that can't happen yet on Bitcoin, what they're really saying is, here's an opportunity to create immense value for people and solve a problem. And so I live in that world. And I'm watching all of these incredibly talented entrepreneurs and that are racing towards these problems to solve, to open up an entirely different world.
Very exciting. I do want to talk about ego death before we finish up, but maybe to the next step, to get back to this concept about AI, because I think there are a few different components of this and how it relates to Bitcoin. The accelerating rate of the improvement of AI is also another thing that I'm not sure people can conceptualize.
They can't. And just think about AI in this. It's exactly the same rate of growth from the early 50s to now. Just that growth is exponential. And that's why I use that paper folding example, right? So 50 folds of a paper, people would guess it'll be this thick, when the 50 folds of paper would reach the sun if you fold it on itself 50 times. So where are we in that? We're on fold like 36. And so now we're in the big folds, and that exponential next fold. And so what it feels like to me is watching this play out, and this is why I kind of wrote how our minds react to this versus because they can't see exponential and they can't see this. What it feels like to me when watching this is people are talking about a frame of a movie and oh, look at this. This happened. And they can't watch the movie play out, but it's the same movie. And when I'm watching kind of the exact same rate of growth, it's just moving exponentially. You can see the movie and all the next steps.
Yeah, I mean, when I talk about these ideas, it's like people have the idea that it took 10 years for iPhone 1 to get from 1 to 8 or whatever, and so the logarithmic progression of that is that it'll take another 10 years for the next, but it compresses, and so these aren't ideas that are 20 years away. It's
the speed of this, and then if you just corresponding how that changes the world you're living in and pricing everything from. and all of the political institutions in this speed of this is happening so fast. It's mind-blowing. And for your listeners that aren't there, if anything I've said in this podcast or anything Scott has said in this podcast has resonated at all and you're not there yet, I would encourage you with a very curious mind to look at this, because you need to be on the right side of this transition.
Can you talk a little bit about the relationship between Bitcoin and AI and how they might connect, and why Bitcoin could be valuable or important as AI advances even further?
So they're polarities. So instead of Bitcoin and AI thinking like that, Bitcoin is the thing that allows the abundance gained from AI to flow to you. That's it. That's the easiest way to describe it. And without Bitcoin, the abundance gained from AI needs to be stolen from you and then used to control you. It's that simple. Because and there is no way to develop a free market in the existing system. It's a control system designed pretending to be a free market. And so the faster technology moves, that technology has to be consolidated up. Where does it go? Where does the data that you use go? It goes in the big technology companies. Where does that data go? It goes up to the state, and it has to continually do that. There was just, I can't remember the act, but it's kind of coming through in the U.S. right now, where and the laws get changed to be able to make sure that control happens. Because if we don't, bad people will use it, right? So we have to protect them. So I think it's called the Cloud Act coming through right now, where instead of search and seizure, like they would used to have to get a subpoena to come and see a court order to invade your house, they can invade the cloud, all of your data, including if you ever had a personal AI, they could infect the personal AI or anything else. All the things that you think are true, they can now see it and you would have no knowledge. So these laws are changing right now rapidly in order to control you. And it's going to get exponentially worse because it has to, right? There is no, okay, it's going to stay here. Just look at the signposts all around the world and you can see it's getting worse, and it's getting exponentially worse, and it has to. Like some of the things you just take for granted today inside your own country, people would have been on the streets years ago. That no way. That's how a banana republic looks. And now it's happening here, and people don't even realize it's happening here because it's happening at an abstraction level so high. To try to, we're doing this in your best interest, right? And many of the people stuck in there actually think they are doing it in your best interest as it's getting worse and worse, creating, and so it's literally that simple. Bitcoin allows the productivity to flow to you and AI to be in service of you. And any other system, if you're making the other system stronger, it's being used to control you. It will be used to control you. Now add not just AI, but add robot dogs, drone swarms, all of those controlled by AI, and think of what that would look like if that's controlled by central actors telling you they're going to help you. That really comes from stealing from you. That's the polarity that we're dealing with right now, and why it's so important that people do some real look and understand. People would do this, and speaking on AI too. You're right. Technology is deflationary. The free market is deflation. Yep, got it. We're going to go straight back to the old system without any thought about the consequences of what that means. If that's true, then there is only one way to allow that to flow to you. That is Bitcoin.
I think that overwhelmingly my love for Bitcoin and why I find it such an inspiring concept is intrinsically it's hope for a brighter future. And some of the ways of helping people understand the urgency to take a look at it, or these things that relate to yours, that can be a little bit doomer by nature. And maybe if you could relate it around to what about Bitcoin gives you hope?
So besides the people I meet each day, besides what ends up out, it's literally the best and brightest that I meet every day in this. And that's why I say, like, in the internet, that's actually why I knew I had to give up everything I was doing before and move here, because it was so compelling, and what was happening was so compelling. I lived it. I never thought I'd have another chance to live something like this. And this one's more powerful, way more powerful than what is Bitcoin. And I'm right at the kind of nexus of that, at the front edge of that. It's so crazy. Is a simple way to say this for many of your listeners. If you live and measure your system, everything in your system, on a system that it's at its ledger is based on theft, who would win and who would lose in that system? What would be the mirror image of society? What would economic incentives look like? What would incentives of everything look like if everything in the world, all trade, was based on theft? And all we want to do is create a really great life for our families, trade with each other all over the world. What would it look like if that ledger was based on theft? It is. And you know it is. And many of the people that are just entering this, you know it is. And you're making it stronger, because and you're trying to get your piece of the theft, whether you're saying it that way or not. And you're making the theft stronger. It's extracting that from all of society, getting stronger and stronger. What would that world look like if it has to get worse on that rate of theft? And now you can see your own actions in it, and how you could say it's everybody else, but it's you too. And then ask yourself, what would the world look like if the ledger was just based on truth? Because that's all Bitcoin is. It's just an honest ledger based on truth. What would that world look like? What would be the mirror of society? Who would win? Who would lose? And it would be the people that were helping and actually productive. And in service of helping and being productive, prices would fall for the rest of the population, and it would keep on doing that forever. So what would the mirror image of life look like in that world? And what I'm seeing, why I'm so positive on this space, is that's the world I'm living in. And it's expanding every day. It's expanding at an unbelievable rate every day. And I just want more people to be able to understand they have a choice right now. Like right now, because it's completely open, decentralized, and secure. The first step is learning. Is that true?
And like you said, it's already happening. Whether you understand it's happening or not, it is already happening. In your example of the house, there are all kinds of examples. And the deeper you get into it, like you mentioned in your own study, the more you realize that it is very much underway already.
This is going to sound soft too. It's love. Like the what you see in this, and the type of people that are in this, that understand where this is going. It is the true human nature where we should be and where we should be going. I think it's going to impose. It's going to create a level of rise in consciousness around the world, because I can see that in a whole bunch of the relationships I've formed out of this, and it's accelerating. So as people start to understand this, and typically they're like you, probably similar to your story, Scott, I didn't get it. I needed to look deeper. It's true, right? Now I need to spend more of my time there. And as I spend more of my time there, I see other like-minded people that are doing the same, and the world heals one of us at a time, moving our energy into the new system. And what is the rate? What is the rate of change of that? One of us at a time. Our energy encoded into the honest network in service of all of us. That's what it looks like.
It's a fascinating idea to me that Bitcoin it's energy money, and it's energy in the sense of that it runs on electricity, but it runs on human energy. And we are, markets are the sum of the action of human participation. So we are the energy that's creating this thing. Absolutely. Let's maybe just quickly touch on ego death. You're doing something very cool with VC investing, helping Bitcoin startups realize this vision. And I wonder if you could just tell us a little bit about ego death.
Yeah. So again, I say this all the time, but it came out of my realization that I was a hypocrite, right? And I say that as I understood this, I talked about it, but 90% of my energy was boards and other kind of fiat companies, trying to help those companies and CEOs create value. But then I realized all of that value had to constantly be captured even if they provide value, they might do really well, but it had to be captured by more and more money printing, which might create a monopoly for my company, but actually create worse outcomes for the world. And so if I know all of this and 90% of my energy is in the existing fiat world, then I'm actually not helping. I'm hurting. And so Ego Death Capital came from, and partners are fantastic, came from some friends that wanted to create that with me. And then my insight that I wanted to put my time into this rather than what I was doing before. Out of that, we've just been able to create, just to help some fantastic entrepreneurs help create the rails and different types of companies that can bring on billions of people to this network. And so we're just now raising our second fund. And our first fund was quite a small fund. It was under 30 million because the ecosystem at that time was quite early, right? The layer 2 Lightning and everything else was early. So we wanted to spend time really helping and spend time in there. And there wasn't a staggering amount of opportunities at that time. Fast forward another 2-3 years from there, and now the opportunities are just growing really fast. So we're going to, and some of the companies we funded are growing extraordinarily quickly. And now we're raising our fund 2, which is $100 million fund.
It's very exciting.
Yeah, it's super exciting because you get to play a role in accelerating what's happening and benefiting from the acceleration. Now, when I think about it, I think we're going to have venture type returns on top of a venture type asset by helping accelerate the best entrepreneurs in the space. So I'm surprised more people can't see it.
It'll change fast too.
Yep, it will.
For our listeners who want to find more of you, other than the references that we've talked about and we'll include in the notes, where can they find you online, Jeff?
I'd say, so go to jeffbooth.ca first, and then I'm only on a couple of places. I'm on Nostr. I spend more time on Nostr. I am still on Twitter, but please make sure that you check any social media that against jeffbooth.ca. And if it doesn't match, it's not me. There's just too many scammers out there, and I will never ask you for money. I will never ask you. You will never see me give trading advice. So if you see that somewhere, I'm not on Instagram. I'm not on a whole bunch of the channels. So if you see that there somewhere there, it's not me.
Jeff, thank you so much for coming on. This has been a real pleasure, and love to have you on again sometime in the future.
Sounds great, Scott. Really good.
Thanks again.
Really good meeting you.
Thanks for listening to this episode of The Block Reward. We're trying to do something different here, creating accessible conversations meant for people who aren't obsessed with Bitcoin. If you found this episode informative and engaging, hit that subscribe button to make sure you stay updated with future episodes. Your feedback matters. We'd greatly appreciate it if you could take a moment to share your reviews and help us with our goal of creating Bitcoin content that is simple and easy to understand. Bitcoin has an important role to play in the future of finance. It will change the way we save, spend, and invest. Discover why Bitcoin offers a game-changing opportunity for forward-thinking employers by visiting blockrewards.ca. Block Rewards' mission is helping Canadian employers implement strategies for integrating Bitcoin into compensation and benefits, supercharge your recruitment and retention strategies, and help your team members plan for the rising cost of living by rewarding their work with the hardest money ever invented. Special thanks to our top sponsor, Paramount Employee Benefits Consulting, Canada's only Bitcoin forward benefits and pension advisory. For more information, find them at paramountbenefits.ca. Big shout out to Podigy, our production team that makes all this possible, and BMX Escape for producing our music. Bitcoin is an expansive and dense topic many people walk away from early. To Bitcoin enthusiasts looking for that podcast they can share with friends, family, and colleagues, one they'll actually listen to, we hope that is us. The content of these conversations is meant to be provided for information purposes only. Nothing here is investment advice. Bitcoin is a big topic. Be sure to do your own research before making any personal financial decisions. Thanks for listening.